Hey guys, welcome to another video on Brand Advice where we talk about business and finance, and in this video I want to show you my portfolio on Trade Republic. Now Trade Republic was one of the few brokers which actually started offering the residents of Germany an app with which they can start investing in the stock market. Before that, it used to be very boring platforms where you just had to go through different kind of numbers, have different kind of interfaces that you had to go through to do the final purchase. Whereas with Trade Republic, they went with the ideology tap, tap, buy. That means as a user of the platform, you're able to buy the stocks or sell the stocks in the fewest number of clicks possible. So far, I've had a good experience. I've been investing in the stock market since January 2020. Well, I turned 25 on 1st January, and that was one of my New Year's resolution that this year I'm going to challenge everything that I know. Everybody used to say that investing in the stock market is a gamble and you shouldn't do it. But the more I learned about it, the more I understood that when you're investing in the stock market, you can invest in companies which are offering real products. They are giving real services, and you're investing in real people and companies which are generating revenue. And with that, you can also get some kind of dividends, or you can invest in growth stocks which do not generally pay out dividends but reinvest all of the dividends or any kind of profits that they have in the company itself, and that results in higher growth. So I'm going to do a breakdown of my portfolio in front of you so that you can take a look at what kind of holdings I have, how much shares, and so on. So my biggest holding so far is Pembina Pipeline. It is a Canadian pipeline company, and I am invested with 573 stocks inside it, a total amount of 12,709 euros. The reason I chose this company is because they have been offering consistent dividends since the year 1998, and they are doing that monthly. That means any kind of money I put inside here, I can see some kind of interest every single month, and this is a way for me to build my passive income too on the side. It is a very strong company so far. They have also done a lot of acquisitions previously. They're also expanding in US, and in general they have been very stable. Then the next stock that I have is of course Tesla, many people have. So Tesla I bought later because I wanted to wait till it gets inside the S&P 500, and now since it is going to be entering the S&P 500 very soon, I bought a few shares. So I bought 19 shares. It's up by 640 euros and a total of 8,944 euros. Then I have Johnson & Johnson. Well, just getting back to Tesla real quick. Now I'm investing at this point because I know sometimes stock can completely overshoot and then you do not even have the opportunity of buying at all. If you take a look at the Amazon stock, now the Amazon stock is at 2,628 euros. How do you buy even one stock? So it doesn't make sense. And if Tesla is successful and it is going at the pace that it is going at right now, then you will see it also going into the ballparks of that. Then the third holding I have is Johnson & Johnson, 64 stocks. It's down by 310 euros, and I have a total of 7,755 euros invested inside it. This company I also chose because of the consistent dividend payment which is paid quarterly. Then the next is Core MSCI World. I have 6,527 euros, which aligns with my idea of investing 500 euros every single month into the Core MSCI World because it is still a more stable way to invest your money because it is very well diversified. But if you're looking for growth and if you're looking for doubling your money, Core MSCI World is definitely not the way to go. This is nice for long term that you're just investing in putting your money inside, but otherwise I do not think if you're looking for any kind of growth whatsoever, doubling your money, this is not a good idea. I recently sold 6,000 euros of Core MSCI World so that I could invest in Tesla when the news broke out that they're joining the S&P 500 because Tesla's growth is going to far outpace all of the other ones that we are seeing here. Then I have PepsiCo, again for dividends, 45 stocks, up 198 euros and 5,457. I can also change it to this so that we can see it better. So after PepsiCo, I have Gladstone Commercial Corporation, also because of dividend payments, and they are paying out monthly dividends with a dividend yield of 8.25%. At Pembina, you have a dividend yield of 7.57%. So these are high dividend paying companies, and generally when you're investing in REITs, they are supposed to pay out 90% of their profits to the shareholders so that they are getting some kind of tax breaks. So that's the reason I generally also have some kind of REITs included, or some business development companies, for example Main Street Capital, I have next. This is also a good company, 154 shares, 183 euros up, and 4,198 euros in total. It has been previously continuously increasing, so I had no problem whatsoever investing in Main Street Capital because of their consistent monthly payments and their growth in the last few years. So then we have SL Green Realty. It's again a REIT, 1,031 euros plus, 77 stocks with 4,004 euros total. Again, a monthly dividend company. Then we have Coca-Cola with 72 stocks, 3,218 euros and 247 euros plus with a dividend yield of 3.11. Then we have Gladstone Capital Corporation. It's up 203 euros. Then we have 402 stocks of it and a total of 2,799 with a dividend yield of 9.4%. Then we have AGNC, again a REIT, and it is up by 230 euros, 2,610 euros total with 200 stocks and a dividend yield of 9.33%. Then LTC Properties, again a REIT. It is 70 stocks, 117 euros up with 2,238 euros invested inside it, and then a dividend yield of 6.08% and again a monthly dividend stock. AT&T, everybody knows they have been increasing the dividends and is also having some good government contracts and good streaming services. They own HBO and stuff, so in general, like, you know, they're not going anywhere. So I also invested very early some amount there, but I'm not like adding inside it because I don't see the growth there. So the growth I saw in Tesla, and recent acquisition that I did was of Palantir Technologies. So these are up by 17 euros 10 cents, now 22 euros 40 cents. I bought 63 shares with 1,234 euros. So this is a big data, machine learning and AI company, which is most probably going to be one of the most important companies in this sector in the upcoming years. So I have no problem like also investing some money there and see like how it turns out. Then Stag Industrial, also a REIT with 751 euros, 30 stocks and 4.82% of dividend yield. I think we missed out on Realty Income. With Realty Income, I have 42 shares. It's down 110 euros, a total of 2,181 euros with a dividend yield of 4.61%. And then afterwards, we have American Express with 7 stocks, just 700 euros, 135 euros plus, and with a dividend yield of 1.48%. This is not monthly paying, it is paying quarterly. So you see that the two growth stocks that I have in my entire portfolio is Tesla, and the second one is Palantir Technologies. People have a lot of like expectations from it because of the kind of mission they have and the kind of business model that they're pursuing. I am going to be invested in them and see like how everything works out, because I realized that if I would be just investing in MSCI World, then I would be also investing in a lot of like smaller companies which do not see so much growth. So I just took a look at the top holdings in core MSCI World. I saw what kind of companies were there, and I was like, you know, if most of the weightage is anyways with these companies, then I would also like think about investing in these individual stocks separately, because again, these are the stocks which are carrying the S&P 500 like up or down, but all of the other ones are just like, you know, lagging in those regards. With Tesla alone, like I'm up 7% since the time I bought it. And with Pembina Pipelines, I'm up 15%. So a total of 1,667 euros because I bought it cheaper. And it is going to go back up to 40 euros or something. And then till that time, I will have 10,000 euros plus just in capital gains. And then I will also have monthly dividends on it. So this is nice. The only thing that I do not like about Pembina Pipelines is that it is in Canada, and for any Canadian stock, on the dividends, you have to pay 25% instead of 15% like you pay on US stocks. So that's not so nice, but right now I do not see any other company which is so stable and has been paying out dividends so consistently every single month. So I have like I can live with 25% taxes on the dividends so far, but then you cross the 801 euro tax-free bracket in Germany, and then you start paying also the 15% from the Germany side. So it will be taxed, but I will see like how it turns out later on. So far in this year, my portfolio is up by 6,000 euros or by a total of 9%. That means these 6,000 euros is the amount that I haven't invested inside. That's just pure profits. I can sell it, get the money out. But if you're investing for the long term. You're investing in the companies in which you see some kind of scope for the future. And 9% gains, I personally don't find bad. Now, if you were invested more in Tesla, or you were invested in NIO, or you were invested in PayPal or something, of course, the growth would be insane. I think like you would have somewhere on like 30-40% depending on what kind of weightages you have in these different kind of stocks. But of course, it is all about getting comfortable in what you're doing. If you want to invest in a particular type of company, if you want to invest in monthly dividend stocks, if you want to invest in dividend kings, if you want to invest in dividend aristocrats, whatsoever, or if you just want to invest in growth companies and so on, it is all your choice. You have to be comfortable with that. And if you want to just passively invest in core MSCI World, which I'm still doing, 500 euros every single month is going inside there because it is more stable. And when I need something, I can sell them out and then buy stocks which I, feel like buying at the moment because I see a higher growth potential there. So this was my portfolio. Thank you so much for watching this video. If you have any kind of questions for me, let me know in the comment section below. If you want to open your depot with Trade Republic, you can do that. Some people who are from different nationalities have issues with doing the identification with Trade Republic. So if that happens, then you can go to Scalable Capital, which is offering 25 euro sign-up bonus till 30th November. The links for both of them will be in the description, so you can take a look at that. Thank you so much again. I'll see you in the next one. Bye-bye.